A lot of Americans, they are hitting pause on retirement savings right now, more than half, according to a new survey. But what does that mean for your future? On this Money Saving Monday, we're joined by Stephen Connors from Connors Wealth Management to really break down the risks in doing that. You know, some people, they just think they've got to cut back. So one of the first things to go, savings, retirement, you know, because they're like, I guess a lot of folks, they don't even think that's so far in the future. I don't need to worry about that. But you're saying that there is a risk in doing this.
Absolutely. And I think that it's easy for the younger generations to think, oh, well, that's not going to be until I'm 50, 60, 70 years old. But it sneaks up fast, and it's something you need to take action now. You don't want to have any regrets in life. And this could be one big fat regret if you don't take advantage of making changes now. So
I was going to say, so you have to adjust your goals, I would imagine then, right?
Yes. If it's your 401k though, and it's a pre-qualified contribution for retirement, which means that if you stop contributing to your 401k, that's going to increase your adjusted gross income and could increase your tax bracket. So that's something to be aware of. The other thing is healthcare savings accounts, which works like a 401k, but can be used for medical expenses. So if that's the reason why you're not contributing to your 401k or thinking about stopping your contributions to your 401k, think about the HSA. If you don't use it, it carries forward indefinitely.
So you're not going to be able to take advantage of the compound interest as well, though?
The compounding growth you get from the markets over decades is absolutely such a tailwind for you. And when you compare someone that puts it off for 5 or 10 years, you compare a 25 or 30-year-old to a 35 or 40-year-old, and you compare the difference at 65, big difference, hundreds of thousands of dollars difference. It's that much.
Wow.
So I would encourage everyone to don't forfeit ever your match by your employer. Let's say your employer offers a 3, 4, 5% match. That's free money. You don't want to ever walk away from free money. So the thing is, that is a part of compensation. So if you're going to be making this decision to stop making contributions to your 401k, understand you're also saying no to a form of compensation that you don't want to receive from your company.
So what about taxes as well? The tax advantage of all of this, that it's going to be gone.
Tax advantage of if you take the money.
Yeah.
Okay, so if it's pre-tax, right, you're never taxed on it. That's why I was saying with the adjusted gross income, if you increase your income, you're going to have to pay more in taxes.
Yeah.
So the more you defer, the compounding, as we were just talking about, will grow and grow and grow, and it makes such a huge difference. So you don't want to, I want to be redundant here on purpose, is you don't want to have any regrets.
Yeah.
And there's plenty of people that I come across in my life, and I see that they did not save enough for retirement. And it's never we're all our youngest age right this second, anyone that's watching. So you want to take initiative, be proactive, and if it's medical debts or whatever it is that's holding you back, cut the expenses. If it's a lot of people that earn, $30,000, $40,000 a year are spending $4 or $5 on a cup of Starbucks coffee every morning. If you just take your Starbucks money and you put that into your retirement, I know that may not be instant gratification, but you will be wise to do so.
Well, and you don't know how long you're going to live as well. I mean, so you're talking about these people, they get to this point. Well, now it's too late. I mean, if you're like 60, 70 years old, I mean, how you're not going to be able to recoup all that time.
Exactly. Time is one of those things. It's an asset, right? And so we want to make good decisions about our health so we can live as long as possible, of course. But let's assume you're going to live to the longest that you possibly could. Don't shortcut that either.
Yeah.
Let's be optimistic. You're going to live a long, full life, right? But let's save for it. Because the thing is that you're not going to enjoy your retirement if you haven't planned to do so.
Yeah. And Social Security, that's just not enough for a lot of folks.
We used to call it social insecurity. I mean, whether the debate goes on, whether it's going to be there or not going to be there, right? Let's just assume it is going to be there, but you should not count on that. So take self-initiative, take the necessary actions now as opposed to procrastinating, and put a certain percentage of your income. And if these 401k, 403bs for city and government, these programs are to be used and utilized so that you can live a comfortable retirement and enjoy yourself. So it's just like when you.
Well, I was going to say, and
Yeah.
I don't know how much time we have here, but
Okay.
I want to ask this. What is the average amount? If I look at my 401k right now, depending on your age, I would imagine, but what's a good amount when you retire to have in a 401k?
It depends on what's important to your lifestyle. So I can't say for everybody you should have. It's because it'll be a general recommendation for everybody that living the same. Right here in America, we all have different wants and needs and things like that. But I would just say that it's best to take maybe 10% of what you earn. Use that maybe as a rule. Okay, a quick rule, and then put that into savings for the future. Because let's not say that you want to spend or save all your discretionary funds or anything over and above your expenses, but think about maybe a 10%. If affordability is a real concern, then you could drop it to 5%. But again, that company match and things like that, these are things to help and enhance, because we don't know what the future is what that holds. But we, within ourselves, we can empower ourselves in our future if we take the necessary steps and actions now while we're younger to have plenty for ourselves, whatever that means, so that you have enough to enjoy.
Yeah, I mean those few percentage points, that really does add up.
It does.
That adds up
And the
fast.
compounding is just, it's miraculous. If you can ask, do a query, okay, on any of the new AI features and stuff like that, you'll be surprised to see how much the differences are by waiting 5 or 10 years longer to start contributing. It's in many cases hundreds of thousands of dollars. And that's why I say don't have any regrets, because the person that lives next to you, one of your best friends or your neighbors, did save for retirement, and they're going on their boat for the weekend, and then you're wishing. Now is the time to take action and be smart. Make decisions, make choices, make good choices. And by making good choices, the younger you are, the happier you'll be in retirement.
There you go. Words of advice from Stephen Connors right there from Connors Wealth Management. Thank you, sir.
You're
Of course,
very welcome.
We'll have you back here for Money Saving Monday. Such
Sure.
tips. Thanks.
Okay.